Welcome to the deep dive. Okay, let's just state the obvious. The AI revolution isn't just about code anymore, is it? It's running on silicon.
Absolutely. The semiconductor sector is basically driving everything right now, all the capital flow globally.
And if you're trying to follow it, the amount of news, data, reports, it's just overwhelming.
It really is.
So we've done the heavy lifting, we screened the market, looked for the top 3 high-volume stocks, price over $10, that really represent the whole spectrum of this AI boom.
Exactly. Think of this as your ultimate shortcut today. We're diving deep into the undisputed leader, the main challenger, and, well, the high-risk wild card.
We're talking Nvidia, AMD, and Navitas Semiconductor, NVDA, AMD, NVTS.
That's right. We'll pull together the technicals, the financials, the latest news, valuation questions, give you a single consolidated view of where the money's moving and what the market seems to be thinking.
And we'll even do some quick paper money math just to see how wild some of these moves have been.
Just for fun, yeah.
Yeah.
To illustrate the volatility.
Okay, before we dive in, though, just one quick note up front. We are looking at data reported by financial sources here, and it's really for educational purposes, okay? To see how these market dynamics play out. This is purely about synthesis, applying knowledge. It is definitely not investment advice.
Absolutely critical point. Okay, let's get started.
All right, let's start right at the top. The company that basically defines this AI era, Nvidia, NVDA.
Where else could you start, really?
And the basic snapshot, the scale here is almost hard to wrap your head around. Market cap, $4.37 trillion.
Trillion. It's not just a huge company. It's like a piece of the world's digital foundation now. And that competitive moat they have, it's unlike almost anything we've seen.
You really see that moat in the financials, don't you? The efficiency metrics.
Oh, absolutely. We talk about profitability, but Nvidia is just extremely efficient. Look at the return on equity, the ROE. It's 109.42%.
Wow, 109%.
Yeah, think about it. The S&P 500 average is maybe 14%. This shows they're just generating profit from shareholder money at an incredible rate. And then there's the profit margin, 52.41%.
So over half of every dollar in sales becomes profit. That's like printing money.
Pretty much. And the growth engine is still firing on all cylinders. Sales quarter over quarter, up 55.60%.
Okay, but with that kind of dominance comes a premium price, right?
Yeah.
Valuation.
Exactly. You pay for dominance. The trailing price to earnings, the PE based on past performance, is high. It's 51.18.
51, okay.
But here's where it gets really interesting, The market is clearly betting big on the future. The forward PE, based on expected earnings, drops way down to 27.84.
Right, so analysts think earnings are going to basically double soon to justify that.
That's the implication. They expect massive earnings growth. The projection for EPS growth over the next 5 years is 36.32%. The market believes NVDA will actually grow into this huge valuation, faster than anyone else.
And the news today seems to back up that bullish feeling. HSBC just upgraded the stock to buy, right, with a $320 target.
Yep, just today. And overall, analyst consensus is very strong. The recommendation score is like 1.33, which is very bullish.
But beyond analysts, it's the deals, the infrastructure.
That's the real story, I think. The ecosystem keeps expanding. There's talk of this massive $40 billion AI data center deal involving BlackRock and an Nvidia-backed group.
$40 billion.
And crucially, look at the deal with Niscale for 200,000 GB300 GPUs with Microsoft. This shows Nvidia isn't just selling parts, they're embedding themselves right into the core strategy of the biggest cloud players.
It's more than just a sale, it's like strategic integration.
Strategic colonization almost, yeah.
So how's the stock actually behaving right now? Price is $179.83, down just a tiny bit today, 0.11%, basically flat.
Yeah, given the moves we'll see later, that's nothing. The trend is pretty stable, which you'd expect for something this huge. It's actually sitting just barely, like 0.20% above its 50-day moving average, the SMA 50.
So holding a key support line.
Exactly. For technical traders, that stability matters. Volatility is relatively low for the sector, 3.80% weekly. And the RSI, the Relative Strength Index, is smack in the middle at 47.56. Neutral.
Okay, so for a trader looking at this, what are the signals?
Well, the immediate buy signal is pretty simple. Just hold or cross back above that SMA 50 at $179.47.
Sure.
Confirms the medium-term trend.
And selling.
For a core holding, a sell signal is way off. You'd need a really significant drop below the 200-day average, the SMA 200. Right now, it's still sitting almost 24% above that long-term average of $145. So the foundation looks solid.
Right. Let's do that paper money math to put this stability in perspective. Say you put $10,000 in 3 months ago. The quarterly performance back then was about 3.95%. What does that look like?
Okay, so 3 months ago, the price was roughly $173. Your 10 grand would have bought you about 57.8 shares.
Okay.
That 3.95% gain over the quarter means your paper profit today would be around $395.27.
So almost $400 profit on $10 in 3 months. Steady?
Exactly. And compare that small investment to the total shares out there, 24.35 billion. It just shows that steady, stable, powerful growth reflecting its dominance, not crazy volatility.
Got it. Okay. Stable giant. Okay, so if NVDA is the king, let's talk about the main challenger, Advanced Micro Devices, AMD. They're really leveraging the AI demand, the king's demand, aren't they, to fuel some pretty explosive growth?
Absolutely. AMD is smaller, sure, market cap around $387 billion, but wow, the recent price action has been something else.
Magnetic is a good word for it, but the financials. You mentioned valuation tension.
Oh yeah, huge tension. The trailing PE is, well, it's 137.34.
137. Okay, slow down. What does that practically mean?
It means the market isn't just expecting growth, it's expecting, like, a miracle. It's pricing in near perfection for years to come. It's like buying a house expecting a subway stop will appear next door, next year, guaranteed.
But you're saying the forward numbers suggest maybe that miracle is plausible.
That's the tension. That super high PE is kind of balanced by these aggressive future expectations. The forward PE drops way down to 38.41.
Still high, but much lower.
Much lower. And projected earnings per share next year. A huge jump predicted. 61.54% growth. Look at the recent EPS growth quarter over quarter, 230.45%.
230%.
Yeah. This is a company showing absolutely explosive momentum, and it's almost all coming from that data center segment going right after NVDA.
And we saw that momentum crystallize today, right? Stock was up
Yeah.
9.4%.
Huge jump today, and the catalyst was validation from a massive name. Oracle.
The Oracle deal.
Exactly, the partnership announcement. Oracle's deploying 50,000 AMD MI450 GPUs for their next-gen AI supercluster. That's enormous validation. It says AMD is a real alternative in the high-end GPU game.
And analysts jumped on that.
Yep. Wolf Research upgraded AMD to outperform just yesterday, put a $300 price target on it. The narrative is strong.
Okay, hold on, though. Massive rally, huge growth, Oracle deal. Sounds great. But the source material flagged something important. Insider selling. CEO Lisa Su, Mark Papermaster. Selling shares, or planning to quite a bit recently. If things are so great, why are the insiders heading for the exits, even partially?
Yeah.
Doesn't that cast a shadow on this whole bullish story?
That's a really critical point to bring up. High insider selling, especially during a big rally, is definitely a flag. It can suggest that maybe the people closest to the company feel the stock price might have gotten a little ahead of the fundamentals, in the very short term.
So it adds a layer of caution.
It absolutely does. It adds caution, maybe some speculation to what otherwise looks like a purely bullish picture. Something to watch.
Okay, so turning back to the technicals, the price is $238.60 right now. That's incredibly close to its 52-week high of $240.10, only 0.62% away.
Yeah, the stock is red hot. And that shows up in the RSI, the Relative Strength Index. It's at 75.63.
25. That's overbought territory, right?
Yeah, definitely entering overbought territory. Anything over 70 usually is. But the medium-term trend is just incredibly strong. Performance over the last month, 48.70% over the last half year, 150.39%.
Wow. So for a trader, how do you play something that hot and potentially overbought?
It's tricky. With that high RSI, a buy signal isn't obvious. You either need to see it break decisively above that 52-week high, confirming the momentum continues.
Or wait for it to cool off.
Or, more conservatively, wait for a pullback. Maybe back towards the 50-day average, the SMA 50, though that's way down $173.50 right now. That shows how far it's run.
And the sell signal.
That's tied to the high RSI and that 52-week high. If it tries to break $240.10 and fails, you'd expect profit taking to kick in pretty quickly.
Okay, let's illustrate that aggressive momentum. Paper money time again. $10,000 invested just 1 month ago, capturing that 48.7% monthly gain.
Right, so 1 month ago, the implied price was around $160.45. Your $10,000 would have snagged you about 62.32 shares. With that 48.70% run-up, largely fueled by that Oracle news, your paper profit is approximately $4,860.84.
Nearly a 50% gain in 1 month.
Exactly. It shows the immense power of that kind of validation for a major challenger in this AI chip race. That's pure momentum, converted straight into capital gains. Huge move.
Huge difference from the NVDA example. Okay, Challenger status confirmed.
Uh-huh.
All right, we've done the Titan, we've done the Challenger. Now let's get to Navitas Semiconductor, NVTS. This feels like the pure speculative play in the AI space. High risk, potentially high reward.
That's exactly what it is. NVTS is tiny compared to the others. Market cap, just $3.23 billion. And the fundamentals, well, they're what you'd call highly speculative. Meaning negative PE doesn't really apply. Negative earnings per share. Negative gross margin even. And the profit margin is hugely negative, minus 182.63%.
Wait, minus 182%. They're losing almost $2 for every dollar they bring in.
Currently, yes. That's what the trailing numbers show.
Okay, yet the valuation, you said astronomical. Price-sales ratio is 47.39.
Extremely high PS, yes. 47.
Why? Why would the market pay almost 50 times current sales for a company losing that much money? What are they buying?
They're buying the story. They're buying the promise. It's pure speculation on future growth. The market isn't valuing the current chip sales. It's betting everything that NVTS becomes absolutely essential to the big players down the road.
The indispensable tomorrow argument.
Exactly. And that anticipation is causing absolute fireworks in the price. The stock soared, get this, 20.60% today.
20% in one day.
Yep. Trading at $15.16. Which is actually above its previous 52-week high of $13.33. It just broke out.
What's driving that kind of move? It has to be specific news.
It is, and it ties right back to our first segment. The driver is explicitly cited as the Nvidia partnership's support for next-gen AI.
Ah, the Nvidia link.
The golden ticket. Specifically, Navitas makes next-gen power chips, JN and 60 chips, which are crucial for handling the massive energy demands of Nvidia's AI systems. Just that association, that direct link to the AI infrastructure king, is sending the stock parabolic.
But the risks you mentioned must be flashing red everywhere, right? Analyst target price
is $6.74.
$6 compared to a $15 current price.
Yeah. So the analysts who follow this company closely think the current price is way, way out of line with fundamentals. They see massive downside potential.
And other flags. Volatility. Short interest.
Volatility is insane. Weekly volatility is 18.73%, and the short float is really high, 28.25%. That means almost a third of the available shares are being bet against the stock by short sellers. Lots of people think this rally is unsustainable.
Technically, then, it must look completely stretched.
Oh, it's almost unbelievable. Performance this week alone, 95.87%. Half-year performance, 771.26%.
700%.
But the danger signs are flashing. The RSI is at 89.26.
89. That's not just overbought. That's astronomical.
Extremely overbought, highly unstable price. And the relative volume is 4.63, meaning trading activity is over 4 times its normal average. Huge attention, huge churn.
So in this kind of environment, where's the signal for a trader? Is there one?
Well, the buy signal is purely momentum chasing at this point. You're buying the breakout above the 52-week high, betting the velocity continues. You are absolutely not buying fundamentals here.
And the sell signal must be terrifyingly close.
The risk is immense because it's run up so far, so fast, a breakdown below even short-term support, like the 20-day moving average, the SMA 20, which is way down around $8.14.
$8 from $15.
Yeah. That huge gap shows how quickly this could collapse if sentiment shifts. The high short interest adds pressure, too. They're waiting for a crack.
Okay, let's try to capture this insanity with the paper money math. 1 week. $10,000 invested just 1 week ago, catching that 95.87% weekly gain.
All right, so 1 week ago, the implied starting price was about $7.74. Your $10,000 would have bought a significant chunk of shares, about 1,292 shares.
Okay, and the profit after just 1 week?
The paper profit would be roughly $9,584.24.
You nearly doubled your money in 1 week.
Nearly doubled it. On paper, it's like lottery money, as you said. Not traditional investing. But NVTS perfectly shows the sheer speed and force of capital rushing into anything with a credible, direct link to the big AI infrastructure players right now. Pure, unadulterated speculation meeting narrative.
Incredible. Risk and reward personified. Hashtag #TechTagOutro.
So putting these three together, you really get a strategic map of the semiconductor landscape right now, don't you?
Yeah, it's quite a contrast.
You've got NVDA, Stable, super efficient, dominant, the foundational infrastructure. Then you have AMD, the powerful challenger, lots of future expectation, validated by huge deals like Oracle.
Mhm.
And then NVTS, the pure speculative play. Volatile, maybe disconnected from current fundamentals, but surging entirely because it's tied directly into that NVDA-led AI power demand.
And the valuations just scream that difference. NVDA's PE of 51 high, but maybe justifiable by growth. AMD's 137 PE, pricing in future miracles and deal validation.
Wow.
And NVTS just throws the PE book out the window.
Yeah.
Trading purely on story and association, leading to those wild short-term gains.
But the common thread through all three, from the Titan to the spec play, is undeniable, isn't it? AI demand is just sucking capital into this sector.
Massively concentrated close. It's not just about the obvious leaders anymore.
Exactly. This whole analysis shows just how deep that AI dependency runs now. It's validating companies big and small as long as they have a role.
Okay, but here's the thought I'm left with. We saw NVDA surge, partly on the Microsoft deal news. We saw NVTS absolutely explode because of the Nvidia partnership link.
Right. The catalyst was the partnership.
So the crucial question for you, thinking about this sector, is what happens next? What happens to all the other smaller semiconductor companies out there that don't manage to secure one of these major partnerships, that don't get that golden ticket from an Nvidia or a Microsoft or an Oracle?
Where does the music stop for them?
Exactly. Where does that inevitable consolidation pressure start to bite first? And how fast does all this speculative money rush out when a company doesn't deliver on that promise of partnership? That feels like the next big shoe to drop in understanding this whole AI-driven market.
That's a really key question. Where does the momentum shift next? Food for thought.